So if you're an investor, you have probably heard of NIO. This is being spoken about by every single person in the past 2-3 weeks. This is because NIO is being compared to Tesla, and most people are saying it's going to be the next big company that's going to blow up in the next 2 to 3 years. So I'm going to take a look at the company details, look at their finances, their revenue, and if this company is truly worth putting your money into for the next 2 to 3 years. If you're new to the channel, my name is Sultan and I am a dividend investor. Do let me know down in the comments below how far you think NIO Stock is going to grow and how long you think it's going to grow for. So NIO is currently selling at $45.40 at this current moment in time, which is significantly cheaper when we compare this to other electric car companies such as Tesla. So this has a lot of room for growth, so which is definitely a good thing. Besides, $45 isn't too expensive if you're an investor. You know, this, you can easily afford one stock of this in, you know, just by saving up for a couple weeks or a couple months or whatever the case is. So that is, you know, already a benefit, right, for those who at least want to just invest to see how it goes. But diving into the actual company details, we can see that NIO has a capital market cap of 6.3 billion, which is, I mean, it is a lot of money. I mean, it depends on what you compare it to, but that is a lot at this time. Of course, they're kind of a new growing company, so they're not going to have trillions just like other electrical companies or whatever the case is, but 63 bill isn't little money, if you get what I mean. They have a lot to work with, but we'll get into some other details which will show a lot more if this is really a stock to invest into. Now, looking at the EPS, so this is the earning per share. So what is the earning per share? The best way to put this is how much a company has left to work with after the expenses and all of that. The thing about NIO is they have a negative EPS, which means they don't really have enough money left to get into, you know, paying dividends. I mean, they can't even afford to pay dividends, but to do with other things basically, or stocks or whatever the case is. So this isn't always bad. Not having a high EPS isn't always bad, but most of the time companies which have a high EPS, like Apple for example, shows that the company is very stable. They have enough money left to do a lot more things, basically, is what that means. But for NIO here, it isn't exactly bad, because what this could mean is they have used their funds to basically invest into the company to make sure the company grows. That is a significant thing. Of course, we like companies, as investors, we like companies which invest their money back into the company to make sure that company develops in the next 2 to 3 years or whatever the case is, rather than just having money laying around doing nothing. So of course, this isn't always a bad thing, and in this case it is probably a good thing. The company is sort of new. They're investing their money straight into the company to make sure they bring out a lot of production, bring out a lot of cars in the next, you know, couple of months. They're making sure they are into the production quickly to sell a lot of cars ASAP, to make sure they really, you know, blow up or whatever the case is. So that's the EPS, which isn't too bad. It's basically a good thing at the moment. It's all right. It's nothing crazy. Now, I'm not really gonna dive into the income statements and all of this too much, simply because I'm trying to keep this video short and simple for those who are beginner investors that don't really understand what all of this means. But in simple terms, they have 7.8 bill revenue and they have negative net income. Again, this goes back to the point where I'm saying most of your money is being invested into the company to make sure they actually develop the company at this current moment in time. So of course, having a negative net income can be bad depending on the company, but if you do have faith and you are willing to risk, then of course it means the company might do well.
So just a quick disclaimer, I am not a financial advisor. I'm just here bringing you my knowledge, the information I know, and how I feel like it might help you. You are working with real money here, so if you're not feeling comfortable to invest your money into any stock, I do advise that you do actually speak to a proper financial advisor who is going to actually help you and guide you to invest in your money. So don't, just take my word as it is, but do conduct your own research. It's important that you do conduct your own research before putting your money into anything at any point in time.
Now we can see that the total assets and liabilities here goes back to the point that I pretty much made again. They have a lot of liabilities compared to assets. Again, probably just investments going back into the company. Once again, I don't really want to repeat myself too many times, but just based on this information that we can see on Trading 212, it pretty much is going back to the same thing. But it isn't too bad because we can see that their assets has gone a little bit. It was at highest point in 2018. It went down a little bit in 2019, probably because they put a lot more in. In 2020, we haven't gotten information on what, you know, their balance sheets are at this current moment in time on Trading 212. But we can see that their liabilities keep growing, which probably means they keep investing and, you know, taking loans to make sure they can put that into the company more and more. Like, think about Tesla, not too long ago. Tesla as well had a lot of debt. Eventually, now Tesla is like the big electrical company that everyone is talking about. Now, of course, I don't pay dividends. I'm a dividend investor, but I'm still investing into NIO at this moment in time. It is, you know, a negative return at this moment, simply because I bought it sort of late. I'm buying it just to test. I don't have too much into it. I'm mainly a dividend investor. But if it does grow, then that is a benefit. I probably will invest more because I do think it's going to grow. I do think that I don't mind, you know, risking $45, for example. And I do really believe in the next 2 to 3 years, it will grow. There's no way I see NIO staying at $44, $45. It almost seems impossible to me. But this is just me. Do make sure you conduct your own research before you do invest into any stock or anything at all, for that matter. So to answer the question, is it too late to buy NIO? Certainly not. It's still $45. So there is still a lot of room and a lot of time to invest. A lot of room and a lot of time to invest. I do recommend investing now if you do want to. Do invest now, just because it's going to continue to grow. Because when we take a look at how it's grown in the past 3 months, we can see that, you know, it's shot up. If you were lucky and you bought it at, you know, $32, $28, then of course that's just more profit for you when this company does grow. But right now at $44, it's still sort of cheap, because when we compare that to Tesla's reaching the 600s, 500s. We can see NIO probably getting to 100 by the you know, through maybe not by the end of the year, but sometime next year, maybe, potentially. I might be wrong, but we will just, you know, wait and see. This is the risky part of investing. I kind of like it, you know, you might like it too. Sometimes, you know, risk do yield high profits. Now there are 2 videos on the screen for you to watch if you are bored. Of course, do entertain yourself and enjoy watching financial content. Do get your money ready to invest. Make sure you're saving, make sure you're living frugally, and take care, guys. Thanks for watching.